So IT is again one space where last year we were bearish. We are, not as bearish as we were, but we are still bearish. Because our view is that it will still take some time before you have clarity on US tech spends improving. And unless you don't have a sustainable improvement in the US tech spends, this is a sector from a large cap stocks perspective as well, still trades higher than 2022 PE multiple 1 year forward. Last year earnings growth was more like 5%, including the currency gains. It looks like it will be 11-12% kind of earnings growth, but X of currency gains, it is still high digit earnings growth sector. And remember that the debate on whether it's a structural issue from the AI theme, that debate will still go on, and as a result also we think that some valuation discount is required. So all put in together, on bottom up basis, there are certain one-off stocks that we like.
Which ones?
That Amit unfortunately will not be able to speak.
My responsibility to ask. Okay.
So by and large, we still think that reason to be cautious.
Yeah.
However, we are not as cautious as we were last year.
Okay, wonderful to know that. But with tech, the biggest story, which is also not talked about as much, is the fact that if you talk about India's foreign outflows, IT sector is most responsible for that.
Sure.
So how does one look at that going forward?
So outflows in the terms of FII outflows particularly?
Yeah.
So I think last year, as you know, we had the historic high FII outflow of $19 billion.
Almost 20 at the end of the year. Yeah.
Correct. So, so our view is that, the run rate of that will slow down, between January to May itself. However, some events and triggers for the markets we think are still negative India up to May. But post-May, we think that the events and triggers for Indian market starts to turn favorable.
What is happening in May?
So let's say, for example, budget, which is on the 1st of Feb, we don't think that there is enough fiscal room to either do a capex stimulus or a consumption stimulus, which is both the stimulus that the markets are hoping for.
Yeah.
So in the lack of both of these, we think that the budget may act as a market sell-off event. In the month of May, there are 5 local elections. Including amongst them, the large states are Tamil Nadu and West Bengal.
Yes.
Generally, Kerala, Pondicherry, Assam as well.
Yeah.
So 5 state elections.
And all of them are opposition states, except for Assam. Yeah.
Absolutely. And around those times, we've seen that the government has been increasing populism, subsidies, etc., which from a market perspective, generally, markets don't like populism. So we do think that up until May, events may be set up against India. And therefore FII flows, FII outflows, I mean. But post-May, if you look at the events, there could be Fed rate cuts as is widely being expected. We think RBI rate cuts could continue. There's a pay commission hike report that will be out that will, which is once in a 10-year pay hike for the central government employees, and therefore leads to consumption sector boost. And over and above that, after the May elections, up until February of 27, there are no more state elections, and that opens a clean window for the government to do reforms. And if they do reforms, I think markets will be excited and will pay up valuations for that as well. So all of this, I think, is reasons why FII flows should come back to India.
Okay.
So on a net basis for the year as a whole, we think FII flows can be positive, but conservatively we are currently working with an assumption of 0.